Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide valuation and mediation services based in St. Louis, Missouri. Today, we're actually kind of building upon a prior discussion that we had, but we're going to be discussing the pandemic economy and divorce with Josh Shilts and Patrick Kilbane. Josh's practice is really focused on complex financial matters and disputes. He's a frequent lecturer on forensic accounting topics and has been involved with hundreds of forensic investigations dealing with matters involving personal and business disputes, as well as the identification and mitigation of fraudulent activities. He's also provided expert testimony in commercial and family matters surrounding business valuations, economic damages, fraud, and other disciplines having to do with accounting and economics. He's a forensic valuation expert and offers tax advice in the state of Florida. Pat, on the other hand, is a wealth advisor with nearly a decade of experience in helping clients coordinate their wealth management plans. He's also general counsel for Ullman Wealth Partners. He is the director of Divorce Advisory Group, where he assists, guides, and supports clients before, during, and after they begin the divorce process. He helps high net worth clients make financial decisions at all stages of the divorce process by using his family law experience, his wealth management experience, and his certified divorce financial analyst designation. Welcome, Josh and Patrick. How are you?
Great. Thanks for having us, Melissa.
It's great to be with you, Melissa.
This is awesome. So like I said, we're talking about the pandemic economy and divorce, which I'm not saying I coined the phrase, but it's definitely how we've been calling it lately. But I think that what kind of everybody out there is trying to figure out and talking about is how have we seen divorce shift during the pandemic? And it's an all-encompassing question, but just some of the things that you've seen. Maybe Josh, will start out with you. What have you seen with divorce and valuation, and how has it been changing?
Valuation, I think the best way to understand that is to look back and understand that when we do value something, there's an expectation of cash flow. And the last 18 months has impacted businesses in a traditional life cycle of 5 to 7 years, depending on whichever author or book. So we've had this 18-month period where there was a lot of guesses as what was going to happen, crashes, and we've come out of that. And now here, as we sit in 2021, we have some historical data that we're analyzing, not just that's coming from service providers, but are in our own practices. And I'm lucky enough to speak with other practitioners, not just here in Florida, but throughout the country. And, we're seeing some common things. And some of the common things that we're seeing is a lot of small and medium-sized entities went through their PPP funds, even with sustained revenues, right? Some of them did it smart by investing into what I would say are operating assets that'll do ROI. I think some of them didn't manage it as well. So what does that mean? We have unique balance sheet situations. So while we've always said we need to focus on the balance sheet first and understand what assets a business has and how those assets throw off return or operate, we now have potentially excess cash at issue, incomes. So one of the things that has come up in my valuation work was there's a lot of times I get a call, we need a valuation, and then an income analysis comes. I say that that's almost definite now. When the valuation call is coming from an attorney, or I'm having a discussion with the client and the attorney, I ask, do you have any issues with income? Now they're saying yes. Mm-hmm. So now, not only and I think it's important for the valuation professional to do this, because we're accounting for the PPP funds, or we're accounting for disruptions in a short period, right? But remember, valuation is an expectation. It's an expectation of what the market will pay for an EBITDA multiple, or an expectation of the cash flow generated for an asset, right? My point is, we're seeing how that cash is used, and then how that will drop down to the individual or multi-partner owners. So there's been some income analyses where we're looking at, are you living off of retained earnings or AR? Was this true operating cash? Or was this a financing activity that was a part of a federal stimulus program? And working more with advisors like Pat, and it's really a good segue, because another thing that's coming out of the pandemic, I think, is a positive sign, is when we're working with divorces, specifically high net worth divorces, the handoff of my information to someone like a financial advisor, I'm seeing that more frequently because of concerns from clients about uncertainty. That would be my 2 cents. Pat, I don't know if you're seeing something different.
Yeah, well, thanks, Josh. So divorce during the pandemic, I really don't think it's very much different than divorce at any other time. I mean, there are always going to be economic events that are going to cause uncertainty. Think 2007 through 2010, right? I mean, let's say you're a very successful land developer and you're getting a divorce in 2007. Well, the valuation of that business is markedly different in 2008 than it is in 2007, right? So, and again, state laws on state dissolution of marriage laws are different in every jurisdiction. A lot of them are very similar, but what you have to remember is the court has to put a value on an asset when that asset is presented to the court. Okay. So I do have a lot of discussions with people that are business owners that are contemplating divorce right now. And they'll say, hey, is now a good time for me to do it? And then on the other side of that coin, the non-business owner spouse is saying, well, geez, for all the reasons that Josh just outlined, maybe I can tough this out for another 18 months and see if things improve. So I think whether it's the pandemic, whether it's the financial crisis, whether it's Brexit, whether it's the savings and loan crisis back in '87, whether it's the .com bust, there's always going to be uncertainty. And you all are dealing specifically with valuation, but the super majority of divorce cases, there is not a business involved.
Yeah.
So for those cases, and for the people that are on the podcast that are more looking for a macro answer, a lot of it is business as usual.
Yeah.
Well, and I think that you bring up an interesting thing, because I think for a while people were like, okay, let's just wait and let's get divorced. Like, let's see what 6 months we're going to be out of the pandemic. Okay, a year, we're going to be out of the pandemic. Okay, 18 months, we're still not out of the pandemic. So now I think people are just deciding to get divorced because they need to get divorced or whatever. So that's fine. That's just continuing. But then when you start to talk about some of the economic factors, we can look back and look at different time periods and say, okay, this is how it affected. But we also have these economic factors that are now influencing business valuations in divorce, but they're influencing the divorce in general. And I want to kind of put this back to Patrick first, because I want to, when Josh is talking about an income analysis, that's an income analysis of the person or the people, the spouses, and what they can earn and potentially pay alimony or maintenance. And it correlates to, when we're talking about businesses, we have balance sheets and income statements. And we're talking about a divorce, we're sometimes talking about a personal balance sheet, right? So walk us through a little bit of what you're seeing, maybe economic factors affecting the personal balance sheet and without a business, right? Like, what are we seeing happening? What are some big topics?
Yeah. So again, very interesting. I think that there's people, whether it's CapEx or any other, sort of large cash outlays that they were thinking about doing. I think people are reserved on that, whether, costs of materials are, construction materials, for example. I mean, I have clients that are delaying construction on second homes, et cetera. I know that doesn't necessarily relate to divorce. Look, one of the blessings about working in the high net worth area is, candidly, Melissa, I really haven't seen many challenges from my clients that walk in my door that are having any of these challenges. I think, what I'm seeing is people making arguments about how their income is depressed. And you two are the valuation experts. I'm not, but I know enough that sometimes the discovery that I get doesn't support their argument that they've had a rapidly acquired income deficiency, which again is not uncommon in any economic time in a divorce case.
Mm-hmm.
I want to piggyback off of two things, actually. I out of what both of you were saying is, I haven't seen a lot of economic disruption on balance sheets. So to mirror what Pat is saying, even when I'm looking at a business's balance sheet, these businesses, because of the stimulus, it's not like there's few businesses that took a real hit. Restaurants, for example, surprised me. I looked at 3 or 4 pizza restaurants that did better just going with the takeout model. So I do think that this disruption led to innovation and people rethinking some of their operating expenses. So when I'm doing an analysis and I'm looking at historicals, I'm weary about some of those now. I think professional services operating expenses are changing from what I'm seeing. So worried about that. And I think that piggies off of what Pat, we hear a lot of noise, but what we're seeing is a little bit different. And I'm still hearing noise. And that's where I'll go. The second thing, though, the valuation date or the date of division, Pat talked about that. That's extremely important. What we're doing more of now than we did was what I call true ups. So we would do, say, a value of a dissolution pre-pandemic. Now we are definitely requesting post-pandemic financials to see how the business operated. Was there passive or active changes to the business? So there's a little bit of that just to check for funny business. But balance sheets are strong. The ones that I've seen that were smart, I think that there are examples of people who, I hate to say manipulate because I don't know that for certain, but
present them in the most positive light.
I question some of the expenses, right?
Mm-hmm.
So it'll be interesting on that standpoint. I think though that what we're talking about and the impetus of this podcast is we've talked about the pandemic economy, right?
Mm-hmm.
Everything that we hear about versus what we're seeing right now is not adding up. What we're seeing is strong balance sheets. So, my question to some business owners in a divorce is, why have you been sitting with so much cash on your balance sheet, right? Picking up those types of things. So if I do have a client who's a non-owner spouse, I want to pick up on those types of things because Pat did hit on a point. There's been a lot of excuses and SIDS, the sudden income deficiency syndrome.
Well, and I think that is a piece of the puzzle. It's like everybody is a little bit concerned still about the economy, yet a lot of businesses are doing very well. There's more business than they can handle. They're more so starting to have employee issues. I think that's been, everybody's been writing about it, that it's hard to hire skilled people. Everybody kind of wants to belabor that nobody wants to work and, because of the stimulus. I don't really see that happening. I really see that people, it's been a shift from the employer always had the power, right? We would decide, we see 10 candidates, we're going to pick the best one and offer them something competitive. Well, now you're seeing a couple candidates that might not even be that great, and you're going to have to pay them more. So I think it's shifting in that respect.
I was listening to a podcast that talked about that, and and the guy said, we're rewriting the social doctrine between employer and employee relationships. So on businesses, we do see some shift in those types of things from the valuation, but there's always change in businesses. I mean, I was listening to Professor Domadoran give a speech, and one of the things he talked about was there's really 3 cycles that if a business has been around long enough, they're going to go through: startup, stagnancy, and decline. Right? So at some point in time, those things are happening regardless within the valuation. I just think that from a client-based perspective, right? So let's turn this discussion away and let's talk more from like what my clients, there's a lot of concerns. Going back to your question in the valuation world and the spookiness that's going out there with all the talks about the Fed and inflation, there's a lot of talk about equity risk premiums, what's going to happen there, what is a true risk-free rate, right? Because of the bonds that are being purchased at the velocity that they're purchased. But those are very technical things that, you know, I think where I'm hearing Pat, and I would agree with him because we've shared some of those, is there's just a lot of concern. And so a big part of my job, I think more of my job, or maybe it's just me putting an emphasis on it in client service, is explaining to clients how things change on a time series analysis, right? Pat, are you seeing that? I feel like you are because we've had talks. That's why I asked.
Yeah, no, I mean, Josh, what you're talking about is what the pandemic, I think, has done, you know, across every industry. It's making people take a look at, you know, long held assumptions, right? I mean, you're talking about, you know, the fundamental ways that you all were, you know, taught from the textbook to value businesses. And now you're, you know, questioning whether your own fundamental methodologies are even appropriate. So look, I think from somebody who litigated in a courtroom, who litigated these issues. So in Florida, the judge can actually pick 3 different, the judge has a choice to value different assets on different dates. So the judge can pick the date that they filed for the divorce. They can value the asset on the date of the divorce, or they can pick any value in between, whichever one they think is most equitable for the parties. So, you know, if I'm hiring a business valuation expert and I'm going to go into court and litigate the value of a business, you know, I'm going to want my expert to actually do a valuation of that asset under those 3 different methodologies and talk with them and feel out which one that they feel is the most compelling and fair to present to the court. You know, because like you said, I mean, you know, everything is changing.
Well, and to that end, I feel like everybody was kind of like, okay, let's wait and see, right? Let's just wait and see. We'll wait for 6 months. We'll see how it all pans out, and then everything will be back to normal, and we'll just write off 2020 as never going to happen again. But the reality is what's happening is we now have 2021 that has continued, right? And so what we're having is sort of this new economy, a post-pandemic economy that is going to continue long term, because what we're seeing in businesses is you might have a higher cost for your employees, but you may have a lower cost for your rent, right? You may have closed down some buildings. And those are all things that are going to be long-term going forward, shifts in the actual business, you know, the way that company does business. So in valuation and in a lot of divorces in a lot of states, we have to look at the past. So now we have a completely wrong picture from the past.
Agree with you.
And so now what do we do?
That's been the problem, because Melissa, to your point, my clients that I do valuation work for in non-litigated matters, scenario analysis. We're running models left and right of black swan events and what ifs, and if we change this, what does that do, right? I mean, that's what we love to do. I think you bring up so I talked about earlier is valuation is an expectation. But why do most of us stay away from a discounted cash flow approach? Because you're talking about fluctuations due to active participation in future events. So what are we left with in our toolbox? And that is, historical cash flows. And everything that we're doing in our work from a valuation from a divorce standpoint is testing whether or not those historical cash flows will stay relatively the same and what's the risk of change, right? To make sure that, so it's really hard right now, to your point, where businesses are going through this fundamental shift. I mean, and I don't think 21 we're starting to see it. 22 we're going to start seeing it. I mean, leases, right? Like, I'll tell you what, my lease is up in a year. I started looking for commercial space thinking there'd be a gluttony of it out there. There's not. There's not.
And the prices are not going down.
No, they're not. So we're talking a lot about the new office and employees working from home. So, but I don't see it in the marketplace. So is it just talk at this point?
Right.
I don't know. And I think, Pat, if I'm hearing you correctly, what we got to do is, yes, it's noise, be aware of it, but let's also focus on some fundamentals too, right?
Correct. And Melissa, there was something that Melissa said that I wanted to touch on about how, personnel costs may, have jumped up. But I mean, look at how much more efficient things are. Take, for example, this podcast. Maybe 2 years ago, I would have gotten on a plane this morning to go to St. Louis to be in some studio to tape this. And then either I stay in a hotel room tonight and fly out tomorrow morning. But instead, I've been able to work a full day and, get on Zoom 5 minutes or get in this StreamYard website to record this. And I'll tell you what, there are all sorts of board meetings now that, I don't drive to. Maybe if I have 4 board meetings a year, I will attend one of them in person because, I still want to have that. But I feel like I can do more community service work and more not-for-profit work, and it's way more efficient.
No, I mean, I think there's efficiencies. It's interesting. I was talking about this the other day. A lot of my clients have just sort of weathered the pandemic, in their Florida home or their California home, and are now wanting to get back to business to do what they need to do. And they are wanting to do more things in person because that's how they've done business in the past. And so I think that there's always going to be a proclivity for people to revert to the past. But as we kind of go forward, we were talking about I feel like there's an impending supply chain issue happening, right? And so I bring that up to you smart gentlemen. And I was like, this supply chain, it's affecting cost of goods sold and inventory. And how are we going to deal with this? And I thought, Patrick, it was really interesting that you gave a different perspective. And and I want you to give it now because that was important for me because I'm constantly seeing things from my perspective. And then you came in and what did you say about the supply chain?
Right. So when we were talking about doing this podcast, you were talking about, specific inventory issues that you're seeing in a business.
Construction, timber. Yeah.
And, I said, look, the great thing about building diversified portfolios for my clients is, of course, there are easily identifiable supply chain issues. And we were specifically talking about lumber. And I said, look, the United States gets its timber from 2 places, Northwest Canada and North Carolina. Well, in Canada, there's, people just chalk it up to COVID, but what they don't realize is there's a parasite that has really contaminated, the lumber, which has contributed to a lack of supply. There's also been tariffs that the Canadian government has, increased on their lumber exports from Canada. Now, certainly there are some issues with transportation, getting the lumber to where it needs to go, but to just blame it blanketly on COVID, is not responsible. And I mean, look at PPE, for example. Remember when the pandemic first started, the PPE was manufactured in China, but look how quickly we pivoted and alleviated that supply chain issue. I think, just like everything else, so many people are focused on just such a very short period of time. But over the long term, these, dips in demand, they're all going to flatten out. And, I don't think anybody listening, and remember, I'm not looking at this from necessarily a valuation perspective, but, a long-term investment plan, wealth management plan. Is anybody on this podcast going to do anything different because there's a lumber shortage? They're not. And this this developer in China that had the market spooked on Monday, but now the equity markets are okay with what's going on in the highly leveraged debt with this real estate developer in China. There's always gonna be some crisis du jour. And another thing we talked about is the Egyptian ship that got lodged in the Suez Canal for 6 days in March. I mean, that contributed to supply chain issues. When you have a 1,300-foot vessel that blocks the entire Suez Canal, that's going to create supply chain issues. So yes, COVID has a lot to do with it, but it's not the entire story.
Mm-hmm.
Something that you said there, and it reminds me, Pat, in our field, some people are starting to say, look, when you do evaluation, it's not about a number, it's really the story of the company, right? And you're giving the quantitative to it. And I agree. I'm on that side of agreement that a true valuation professional can either tell or write the story of it. A lot of the stories that we've heard is, well, COVID did this and COVID did that. And, when we started investigating those things, no, that wasn't the point. So the excuse is lifted, right? And we are starting to challenge and look into some of those other things that you're talking about. But more importantly, I think the point is what I'm hearing, and this is somebody who doesn't do valuations, is still, we're not in the trust business, right? And just because a business owner says it's depressed because of COVID, well, we should probably take a look underneath the hood to see whether or not that is true or not true, right? Because I am hearing a lot of, well, COVID did this.
Mm-hmm.
And I think that's a valid point that both of you, look, did COVID really do it? I mean, to say that it was just COVID, well, what did COVID do? Yeah. I guess is the next point.
And the interesting part, though, and that's why this is kind of like pandemic 2.0, right? Because at the beginning, when we would be doing the valuations or divorce, everybody would say, well, 2020 is not going to happen again. So let's just continue to look at 2019, right? And we looked at what the past had in the past 5 years, and we just kind of ignored 2020. Not we, but, generally business people were like.
We took it as an anomaly, and we didn't put a lot of weight to it.
Correct. And now it's like, wait a second, I'm talking to clients, and I was like, your business is significantly different than it was in 19. It's significantly different than when even it was at the beginning of the pandemic, because maybe they were part of, creating masks. Maybe they were doing this. Maybe they shifted for a certain time period. We had some clients that started to do the hand sanitizer because they had manufacturing, so we really, it's just made us continue to have to look at it. But I think it's also going to potentially have to shift the courts to understand what a discounted cash flow method looks like, what looking at the future looks like, because we cannot, that is the purest definition of using a discounted cash flow method. If the past is not indicative of the future, then you have to look at the future for the indicator of value, which is a discounted cash flow method. And I think that things are shifting. I mean, even trials, you say that it's easier to do this podcast. I've been able to testify in trials that maybe I wouldn't have been involved in if I would have had to travel. But in some cases, everybody else goes live, right? But I come in as a Zoom or WebEx. So I think that has been shifting tremendously.
And Melissa, great info there. What I would tell all the valuation experts who are listening to the podcast is your job as an expert witness is to educate the court. Okay. And I think the more context that you can give to what you're doing and why, you believe in your professional opinion that whatever method that you use to arrive at your value is one that's, that's generally accepted. And I mean, look, any skilled lawyer is always going to be able to, make a case that, history is not always going to repeat itself, but it tends to always repeat itself. I mean, this pandemic and the Spanish flu, I'm sure you all read articles and saw newspaper clippings of people in masks and people complaining about the government making them wear masks at that time. I mean, here we are. The difference between then and now is look how quickly we rolled out a vaccine. Look at, how well some pharmaceutical companies are doing because of, look at profits by Pfizer, Moderna, Johnson and Johnson. I mean, and now they're talking about third doses and how often are we going to need to continue to be vaccinated?
Right. And it's the same process. The reason why people can continue to build pools and build things that need lumber and pay double for construction is because their business is also booming and making money. And we are, for the most part, still staying more local than we have ever in the past. Like some of us, yes, are like getting out occasionally, but most people were taking 1 or 2 vacations every year consistently, right? Spring break, summer, holidays, whatever. And so I think that the individuals are having more money and they're able to use it. But like one thing that I think you could give a perspective on, Patrick, is like, just in general, should we be preparing for a correction in the market? Should we how should we prospectively, what do you see happening in general that's going to affect business, or even a topic that we can kind of, start to dissect a little, because there's so much changing. I don't even know what to think about going forward.
Candidly, Melissa, if I knew the answer to that question, I would not be on this podcast.
Oh.
I would be inviting you and Josh to come visit me at my island home with a money printing machine sitting next to me.
I love it. Yeah.
Look, there were articles pre-November 2020 about, is value dead? Is Warren Buffett, is he lost his edge? And then what happened to value in November of 2020? It was up 20%. Mm-hmm. I mean, there are some fundamentals that, large growth may have had an out-of-body experience relative to small value. But just when you least expect it, that small value premium came roaring back. And the way that we do it, we build a portfolio. And when the market gives us an opportunity to rebalance that portfolio, we do it. Mm-hmm. There's no emotion involved with it. We just do it. We rebalance. And some of our clients, between February 19th and March 30th, we rebalanced some of their accounts 4 and 5 times. Mm-hmm. We rode that trend all the way down, and none of us knew that March 23rd was going to be the bottom before things all of a sudden shot back up. So what I would tell the personal investors on the call, I mean, maybe this is different for business owners, but you have a plan. You can't be emotional about it. Whenever economic conditions present themselves, you have to act. You have to act without emotion and be disciplined about it. And that's what we've always done. And going through that just made me even more resolute in our process, because nobody knows. If we would know what asset class, like Josh, you were talking earlier about commercial real estate inventory. One would think that it would be plentiful, but it's not. People can't understand why housing prices are so high. Well, if you dig into it, you see that there's a housing shortage in America relative to demand. So it makes sense, right? And again, back to what I said earlier, there are so many different variables. The world is so interconnected that there's not one if they're telling you that they know, they're lying.
Mm-hmm. No, I think it's very hard to predict going forward, other than to continue what you've done in the past, or reassessing everything. But I also think from a business perspective, we've done some deals in the past during the pandemic, and the reality is, and I was talking to another client, the reality is there are a lot of companies that are really in the middle market, right? Not the huge ones, not the teeny tiny ones, but like good middle market that maybe from a cash perspective weathered the storm a little bit better than other people. Like to what Josh was saying, is that why are you sitting on so much cash? Well, they started to take that cash and they started to do cash deals, which, in the past, it was always like, how do you debt finance this deal? How is somebody going to get money? Well, these guys are sitting on, so we've had several full cash deals happen, and it's changing how some of that lower middle market is transacting. So at the beginning of the pandemic, it's sort of like, what are you going to sell and get nothing for your business? No, they're getting something for their business, and it's a cash offer. So if you guys started to see even some, because we're seeing the offers even come in during the divorce, because, you ask for, do you have any offers to buy your company? And they're like, damn it, yes, we did. Those types of things are happening even when the companies are not necessarily profitable, because people are taking opportunities to expand and maybe get deals. So have you guys seen any of that happen?
I'm seeing more of it than I ever have on the private equity side. We've been involved in more deals than we ever have. And I agree with you. I think there's several factors. You have a baby boomer age group who have been through the Great Recession and another pandemic, and they're saying, okay, I'm done, kind of a situation. So what the pandemic did, hindsight's always 2020, is it almost gave us a shot of adrenaline into the future. Look at how we've become. I would guess that everyone living in this country is a better user of technology now than they were 18 months ago, right? So in our business transactions and whatnot. And you're right. I didn't predict. I knew, I was believing that there was going to be businesses who were better capitalized, who saw the pandemic as an opportunity to expand operations, to acquire not necessary, acquisition of competitors, acquisition of complementary assets. I'm seeing more of that moving on, and that's where that scenario analysis is coming into play. So it's different there on a divorce, but it's a good question to be asking right now for anyone who's going through a divorce. Has your business been, have you been approached about an acquisition? Because it's going to tell you potentially if there's some sort of a letter out there. I want to see that, because that's the open market telling me a price right now.
Exactly. I would also think, in this, gets us off topic slightly, but the potential legislation around increasing capital gains taxes and whether that's going to be retroactive or not is also a really, really significant consideration that I'm seeing.
Big time. Listen, the pandemic, now that we have the 2020 data, let me tell you the good use of it. It's going to tell you a lot about management and their capabilities and knowledge, Melissa. And that's what I think you're getting to is. So that's helping me in my CSRP analysis. It's helping me with projections, forecasting, the management strength. But to Pat's point, as a valuation analyst, I'll tell you what the two number one topics I'm thinking about that I think are going to have an impact. It's inflation and the equity risk premium, the risk rates, but also to piggy off exactly what Pat is talking about is the taxes, right? Because they're talking about corporate rates, which has a direct impact to how we value. We went through it with Tax Cuts and Jobs Acts, built-in capital gains within businesses, how we handle those potentially in a valuation context. The transfer is going to potentially be costlier in an asset sale. So do you start seeing people say, instead of an asset sale, which we've traditionally recommended to small, medium-sized entities, we go to a stock sale? Well, all right, we'll do a stock sale, but now we need to do more due diligence because we're acquiring. So that's all off of the tax side of it. So I agree with Pat that the tax and inflation and what the Fed is going to price at are things that are going to impact valuations, i.e. pricing.
Mm-hmm. Well, and I think part of this issue is that when you start to combine uncertainty with divorce and unknowns and inconsistencies, and this was up and this was down and this was up, it creates this mistrust. And now it's like, well, then he contrived it and she did this, and they're making it look bad. They're making it look good. But the reality is, I don't know. I think on a personal level, things have gotten bad for groups and people at an individual level, but at a business and even certain industries, right? But those industries already had issues to begin with in a lot of capacities, low margins, they already had some issues anyway. But what
they
we're
were
seeing,
distressed.
Right. But businesses,
this is what I talk about is distressed businesses. And that's why I think the pandemic was a shot of adrenaline that maybe moved us forward as a society a couple of years. When we look back in 10 years from now, what will we say about the pandemic? God, we got better at business? Maybe. Maybe.
I agree with that wholeheartedly.
Well, and it may not be getting better. It's that, I sort of feel like some of this is like survival of the fittest. Did you know your market? Did you know your customer? Did you know, were you just in a space because you could make some money there? It's really going back to some people that were in business as a passion, that they really loved it, that they were able to maneuver a little bit better, as opposed to if somebody was just out there trying to grab cash and that sort of dwindled. We did see those businesses go away, right?
I have a perfect example of that, where I just got done with a divorce case and evaluation. 2020, there was a loss. So they said this company had absolutely no value. Let's not even get into goodwill and all of that, right? Let's just, because it didn't make any money. Well, I was able to show that, yes, they had a loss, but let's talk about these expenses. First of all, let me tell everyone who's listening, there was a 30% increase in revenue. So it was consistent with its prior 3 years. Consistent 30% trends. And guess what? It was even higher during the pandemic year. So we started digging into the expenses and what are we really doing here? He was in expansion mode. So he was buying up these little things, to your point, right? From a tax perspective, it looked like there was a loss. But what we really found was acquisition of other assets. So when I looked at that and I looked at what is the base asset and what does the base asset mean on a gross profit percentage when we put it in the proper period for measurement, turns out this business was not a $0 business. You know what I mean? So you can see the reverse of that too, where instead of them expensing it in investments, they were expensing it in stupidity.
Well, and I think in again, we talk about a lot of different concepts, and inflation is one of them. And I think it is concerning. And all of these things just remind us that we have to do a lot of work in the valuation. But Patrick, do you have any thoughts on inflation? Do you have any thoughts on, because of or investment or any of this, because it is so hard to wrap our head around all of the different factors and how they would combine with this business. So what are you
but
seeing?
also on the personal side too, right?
Yeah.
I mean, and that's the biggest thing. The business is flux, but I think that's where Pat's talking about is the personal side, the 401ks and the investments.
Right.
So look, the word inflation, I think we would all agree, has a negative connotation, right?
Mhm.
But a little bit of inflation is what the Fed targets every single year. So it's when we have too much inflation that there's a problem. And all of the economists that I've talked to in other webinars that I've done, they expect there to be a little bit more inflation than average for a very short period of time. But again, they don't think that's going to last. And then, we get questions about people saying, oh, well, gosh, look at our national debt. Well, our national debt in and of itself is a massive number. But when you look at the United States' balance sheet, we're in a really healthy position. And if you look at what the interest rate is on a 10-year treasury, what is it? 1.6 right now? I mean, people are making bets every year. And if you expect the US government to default on our debt, you demand a much higher interest rate than 1.6%, right?
Mm-hmm.
So, again, inflation, yes, it's a great thing for financial journalists to write about and get people all riled up and get them to click their articles. But, the data and the economists and the people who are, into the labor statistics and the consumer price index and people who have PhDs and study this on a daily basis are just not concerned about it. And, when we do have inflation, that means that corporate profits grow and dividends increase, right? And for personal investors, that all gets returned to them and reinvested, hopefully. So again, not the worst thing in the world. Gives us an opportunity to rebalance our portfolios and trim off from the fixed income side and purchase equities when they may take a dip if there's a sell-off in equities because rates are increasing.
Mm-hmm. No, and I think that you brought up another issue a little bit earlier about capital gains. And so when you have either, one spouse or both spouses are business owners, and you talked about some capital gains things changing, what does it even matter in a divorce? Like, do we even care about capital gains? And do we care about any changes and things like that? And how is it affecting us?
Well, sure. You always care about it. And when you're analyzing and trying to figure out how you split the assets, look, 90 to 95% of divorce cases are settled. Okay. Yeah. And hopefully the high net worth people are working with forensic CPAs and financial advisors to help make sure that they're comparing apples to apples if do we care about capital gains? Heck yes, we care about capital gains because you don't want to compare an apple to a giraffe, right? Mm-hmm. And you don't want to stick one party with all of the assets that have an extremely low cost basis. And then when they need to liquidate that for retirement years or whatever, they get stuck with a massive tax bill. So yes, we are always cognizant of capital gains for sure.
Well, and I think that a lot of times if we're looking at a portfolio of retirement assets and you plan on splitting them directly down the middle, right? Every 2 shares you have of something, 1 share goes to one person, 1 share goes to the other. It's not that big of a deal. But that's not traditionally, I think people traditionally think that when you look at the marital balance sheet, like we're going to split the house in half, we're going to split the retirement in half, we're going to split the bank accounts in half. And that's not really how it all works out. So in some capacity, we're actually trying to even up the whole pie and split the pie evenly or reasonably, but it doesn't always have an effect. But taking, I mean, maybe we should just talk a little bit about that, but taking retirement assets is not the same as taking money in a house or cash or any of those. And
Correct.
so what do you talk about to people who are getting divorced and who are like, oh, I think I just will take that, you know?
Well, I say that's okay, that's fine, but you just have to realize that if you're taking the house and you're going to keep it, let's say you keep it for 3-4 years, you remain a single person, and there is significant appreciation in the value of the house, and you really haven't done anything to improve it. It's largely passive. Well, when you were married, you used to be able to exclude $500,000 of the capital gain. Now you're only going to be able to exclude $250,000, assuming you don't get remarried. So let's take a look at what your proposed split is, and now let's sort of take a look at it with a different lens on, taking into consideration the tax treatment or what needs to be taxed on those assets. So it tells a different story, but a lot of people are leery of paying professional fees, and they just think that they can do it, and then they come back and they realize, my gosh, did I make a huge mistake? And in Florida, when you divide the assets, the court does not want to get back in the business of people who have buyer's remorse and fixing the division of assets. So once you do it, it's done.
Mm-hmm.
And if you value a business and the spouse has worked in the business, and somebody says, well, you can have the business, just pay me $50,000. And they say, well, wait a minute, Judge, I should have had a business valuation. Court's going to say, tough. You had your opportunity to have a business valuation, and you elected not to do it. Unless there was some duress or something like that, you had a fair shot at a valuation, and we can only assume that you just chose not to do it. Huge mistake.
Yeah, absolutely. Well, and one thing that I think we all know pretty well is this concept of a financial neutral. And that's where we all come in. And you talked about a little bit of what our role was with the court. But, in a lot of these situations, we're bringing in financial people. A lot of, business valuation people are one of them. But a lot of times it's financial planners, it's wealth managers, it's people that understand the money aspect. It could be accountants and things like that. But does that role change if you get into mediation? Because a lot of things are moving towards getting done outside of the court, right? And I think that couples have a lot more options than they did in the past because the court system is kind of clogged up, So Patrick, as being a CDFA and how does your role, how do you get involved with those people getting divorced? And do you handle divorces of your own clients?
Yeah, so really interesting. I'm a lawyer by training, so of course I'm very leery of conflicts of interest just by nature, because it's a serious issue that we have to deal with in when you're representing somebody. And in a divorce, there's an inherent conflict of interest, right? I mean, the parties have competing interests, but from the financial side, we really don't have those conflicts of interest when we're trying to help a couple, split their assets up. And, there are a number of times where, a referral source will say, listen, I know this couple, they're very amicable. Will you sit down with them and help them come up with a settlement? Absolutely. And I don't think, although, if that, amicableness breaks down and they end up litigating, nothing would prevent me from, working with one side or the other. There have been times where, I met with somebody and then they decided for whatever reason that they didn't want to have a financial person involved. Now, remember, I don't have any conflict of interest. And then the other side will call me and say, I want you to be on my side. And I say, I would love to do that. However, I don't feel comfortable doing it because I already talked with your estranged spouse. But that's just the way that I do business. And from a litigation standpoint, when you're hired as an expert witness, I mean, there's an expectation that you are going to do the job that the person that hires you, that they want you to do, but you've got to do it within the bounds of advocacy and what you can, raise your hand and swear is an appropriate way to do your job. I think that I'm able to help my clients get the results they get and achieve fair settlements because, I don't take extreme positions when I testify as an expert witness. And maybe that costs me some business sometimes, but I think as an officer of the court, as a lawyer, I want to present candid testimony to the court.
Yeah, I the only difference to me, because I learned this a long time ago, and I completely respect, and I hope other people that give expert testimony hear this and hear what Patrick was saying. It doesn't have to be a nerve-wracking job, okay? Accept the fact that your job is for a trained attorney to try and point out. But if you follow your standards and your methodologies and you stay true to yourself, you're not going to get into situations like Patrick's talking about. And I also think that you may lose some business, but I'll tell you what, I think in the long run, it'll work out just fine because of the respect factor. I've done that, and there's probably some people that don't like it, and I don't think it's hurt me in any way. I do think that as a neutral, the role changes because now the number of chefs in the cook has doubled, and so you're managing two clients, husband and wife or whatever, as well as their two attorneys. And so instead of having one expectation, there's two expectations. But again, if you follow your path and you can explain your story, so it shouldn't be an issue.
Josh, I want to jump in and say one thing real quick. So, for all of you who are expert witnesses or thinking about expert witnesses, just think of your title. You are the expert. You are the person who is in that courtroom who knows the most about your subject matter. Okay? So the person asking you questions, whether they hired you or whether they're cross-examining you, your answers are only going to help the trier of fact understand the subject matter. Okay. Mm-hmm. So you don't have to feel like you're being attacked. It is just your opportunity to further clarify your message. And what I used to tell all my expert witnesses is, you all produce these reports that are 80 and 90 pages. They're very fancy. They're very impressive. They have tables and charts, and they look like they're very expensive to produce. But what I tell them all is, I want you all to boil that 80 or 90 page report down to a 1-page executive summary. And you assume that the judge, I'm sure she's a very smart person, but let's say she was a career district attorney or, prosecutor in an even more. And that person just got rotated in to hear a business valuation issue in a divorce case. They're smart, but they don't have any experience, or this may be their first dance with this issue. So keep it very simple. If you were going to use terms of art and phrases, that's not helpful.
Mm-hmm.
I agree.
No, I think it's all. I think it is changing. I think that more experts are working with the couples together, and I think that the couples are starting to realize, okay, if our personal portfolio is lower now than it was in the past, do we want to continue to lower it by fighting about things that may not have as much relevance as it did in the past? And I think that we are the facilitators of those discussions. And I agree with you. Like, I have a whole process of when I go to court, I'm the smartest in the room and nobody else is going to be able to touch it. But it's also because I try to produce reports and things that I believe the story too. Like I feel that is the accurate representation of what is happening. And that is different than maybe other people have done in the past. But I think that the process of divorce is getting more transparent because, and so those things, like we just had a request yesterday of, give us all of the bank statements and credit card statements for the company, for personal, for all of 21. And it was just like, just give it, because it is what it is, and if there's something that's not great in it, then there's something that is not great. But it we're starting to just see that the facts are the facts. And, but I think it's also, if you're a couple out there, there are still attorneys that will hire experts because they will do what they tell them. And I think that as a client, if you don't know that that's happening, it's going to catch you, and it could hurt your entire case if that one expert is very flimsy because the attorney set them up to be flimsy. And I'm not saying that was a good choice for the expert, but I'm saying that happens a lot. And the client, I don't think always is aware. And so in that kind of perspective, I think that the client and the business owners do need to get more involved and be a part of, working with the expert or the financial person, because then they will know the truth, as opposed to, oh, we're going to put on this position in court and I hope it works. And everybody can see through it. I mean, I was in court this week and they were trying to tell me something and I was like, that's a horrible idea. And the judge was like, I mean, you just can't go in there and have people believe in anything right now. You have to paint the picture that makes sense, and it can't defy logic, basically, which Agreed. I think a lot of times it defies logic, and then everybody sits back and like, that doesn't make a lot of sense.
Keep it simple.
Judges are logical. They may not get everything, but they will default to logic every single time. Like, that doesn't make sense. Why, we had one where the value was lower than the cash balance. And I was just like, judge, the cash is 2 million. The value can't be 1 million. This is just simple math.
That's it. That's what you need to do.
Yeah. Yeah. Yep. So, any other
Judge, if you knew that there was 2 million of cash in this business and you bought it and you got the 2 million bank account, would you pay $1 million for it?
Right.
Every day of the week.
Mm-hmm. Mm-hmm. I think I even said on the stand, like, judge, if you want to have this business be worth what the other expert says, I will buy it.
Right.
Because I want the cash too. Like, I'm going to actually go take the cash and I'm going to buy it from you. How about that?
Agreed.
So I think it's very interesting. Do you guys have any other ideas or thoughts about the pandemic and what people should kind of consider, as they get divorced, or any other suggestions, or maybe how they can reach out to you if they do have questions?
I would say the one thing that I got, because I'm always trying to learn too when I talk to people like both of you, is weed through the bull. And what I mean by that is, don't just believe everything that so-and-so is telling you. And, I talked about technology. Technology also lets us go out there and see Google and what is this person's reputation? How real is this kind of thing? And, if you're going through a divorce and there's assets, talk to a financial advisor, talk to your CPA. If you already have that established relationship, talk to them. Maybe just because they don't do this work or they don't have a background in this work doesn't mean that they don't know somebody, or doesn't mean that they can't help you maybe be aware of a potential issue. Mm-hmm. So I would stress that to anyone in a divorce situation, to not just put it off to it, because you're right. I've seen too many businesses distributed at far less the value they should have been. And all it takes is a simple phone call.
Mm-hmm. Yeah. And Melissa, to that end, one of my big passions, since I litigated high net worth divorces for nearly a decade. I wrote a book to try to pull back the curtain and really do what I just talked about and explain, how it works in kind of a plain English way. So, and look, I make no profits off the book. Anything that we make off the sale of the book, we donate to a battered women's shelter in Northeast Florida. So it's really a mission to educate and to, again, help people not make expensive mistakes in the divorce process.
And I'll say it, I've read it. It really does a great job for the client to understand the roles of the different professionals and what everyone's roles, responsibilities, and backgrounds are. I think, to Pat's credit, and Caitlin, who was an author on it too, they did a good job of answering questions or shedding light on things that so much of us take for granted. And it was very client focused. And it's still a good read as a practitioner to say, these are things I probably should be talking about.
Yeah. Well, and I'll put it up here again. You can kind of see it move forward confidently, a woman's guide to navigating the high net worth divorce. But the big key, I think, in the book is that, or the focus of the book is that if you want to sit back and think that everybody is going to take care of you in your divorce, you are wrong. You need to build a team, and you need to have a team that is actually smart enough to know what they need to know in that state for your particular situation and things like that. So it isn't just like, I'll hire my attorney and I hope he does great, or I hope she does great. No, it's really, and it's also being part of the process, because whatever the financial situation was prior to the divorce is going to be different after the divorce. And you need to be more aware. We usually have one person that's not financially savvy or knows everything that's going on. So it's an opportunity for them to be part of the process so that they're smarter on the other side. And I think that it's really about, making sure that you are your own advocate. I tell clients all the time, like, don't expect your attorney to be the advocate. Don't expect the financial person to be your advocate, because we're not. I'm there for the court. You have to be your own advocate. And that, I think, is part of what the book is kind of going through and covering. And I think that it would be very helpful for people. We can certainly reach out to Patrick either via the website, or we also have his email address, things like that. And I do encourage, we have Josh's information. You can reach out to him. And all of us do bring different perspectives, and we're in different locations, So a big thing about getting divorced is sometimes you really need to have somebody, not always, but somebody that really knows the state you're getting divorced in. Yes. I think that that's a big piece of it, like
Melissa, that is the biggest piece of it. Okay. Look, even in Florida, we have state law that's one size fits all if you don't have a prenup that governs the dissolution of your marriage. But each county, there's 67 counties in the state of Florida. The counties have their own local rules. And even the judges in Duval County, which is where I live in Jacksonville, there's 7 family court judges. They all have their own divisional instructions on how they like things presented. And, just because you know a judge, it doesn't guarantee an outcome. But if you don't know the judge and you walk in the courtroom and you're not following their local rules and you're upsetting them, that doesn't reflect good on you as a client. So you need to investigate who are the lawyers who spend the most time in front of those judges. Because if you try to pick the lawyer that represented Jeff Bezos and you're going to import that lawyer, let's assume that it's somebody that came from California into Florida to have a high-powered California divorce lawyer in a Florida courtroom. Not the best strategy.
Yeah.
No, great point.
Well, and I usually want to say, well, experts can do work anywhere, and we can, But I will say we did have an out-of-town expert come in for a Missouri case, and they didn't know one critical case law that governs like the entire way we do a certain thing, right? And they didn't know it.
Oops.
And I could tell. And we hung them out to dry on it, you know?
Yeah.
And so those are the things that you can do everything right. And there's one little case that you didn't know about, and no one's going to tell you until you get to the stand, right? And so either you have to do really your research to operate, because like we have a couple states that we can operate in because we're in the Midwest and we're close, but that's not always the case. And I think your point is really accurate, that it is also county specific. Like we have 2 counties that are right next to each other, and literally if you cross that river, completely different.
Well, I'll tell you, I got to know Josh because we were both expert witnesses in the divorce case, and I knew the opposing expert witness who, you know, has a fine reputation, but Josh testified, so did this other person, and of course I testified as well, and I got a copy of the court's ruling. Well, the court found Josh to be the credible one, to be the one that had the better methodology, and the court accepted Josh's testimony and used Josh's value for the business in that case. But then the court went on to, you know, outline their challenges with the opposing experts' testimony. So whenever somebody calls me up and says, hey, I'm in this county in front of this judge, I have a business, which business valuator should I use? I just flip them that order from the judge saying, this is, you know, here's an expert that testified in front of that judge. I have a document in a public record where that judge, you know, extolled the virtues of Josh's work and found him to be credible. I mean, that's a good place to start, right?
Yeah.
That's a good point. Yeah.
Well, and it's funny because this week in testimony, the other attorney tried to say, you know, well, you knew testimony of one of the parties. Why didn't you rely on that testimony? And I was like, Judge, I'd much rather rely on documents than the testimony of, like, I mean, he could say whatever he wanted to, you know. So it was interesting. And they were like, well, that's true.
Right.
You know, some of this is very interesting.
I don't want to rely on the CFO who's being paid by the CEO who.
Right. Like, I kind of feel like the documents should tell the story, you know, but I think this has been a great conversation. I appreciate both of you so much. I'm sure we're going to have a pandemic version 3. So, you know, stay tuned. We'll be back, right?
Sounds like a plan. Thanks for having us, Melissa.
All right. We appreciate it. Thanks so much.
Thank you, Melissa. Enjoyed it.
Talk to you soon.
Bye-bye.